Owning a home is a significant milestone, but for many homeowners, the mortgage can feel like a lifelong financial burden. Paying off your mortgage faster than the standard term can help you save on interest, reduce financial stress, and provide more flexibility in your financial future. Fortunately, there are several strategies you can use to accelerate your mortgage payoff. In this video, we'll explore the top 10 mortgage hacks to help you pay off your house faster. 1. Make extra payments each month. One of the most effective ways to pay off your mortgage faster is by making extra payments. If you can afford it, consider adding an extra payment to your mortgage each month. This doesn't necessarily mean paying a full extra month's payment every month, but even small additions can make a big difference. For example, if your mortgage payment is $1,200 a month, consider rounding it up to $1,300. The extra $100 each month will reduce your principal balance, allowing you to pay off the loan sooner. Over time, these extra payments can save you thousands of dollars in interest. 2. Make bi-weekly payments. Another way to speed up your mortgage payoff is by switching from monthly payments to bi-weekly payments. Instead of making one payment each month, you would make half your mortgage payment every 2 weeks. This might sound like a small change, but over the course of a year, it adds up to 13 full payments instead of the usual 12. This extra payment helps reduce your principal more quickly, ultimately shortening your loan term and saving you money on interest. Many lenders offer the option to switch to a bi-weekly payment schedule, so check with your mortgage provider to see if this option is available. 3. Refinance to a shorter loan term. If your current mortgage is on a 30-year term, refinancing to a shorter term, such as 15 or 20 years, can help you pay off your mortgage much faster. While your monthly payments may increase, the advantage is that you'll pay significantly less interest over the life of the loan. For example, if you refinance a $200,000 mortgage at 4% interest for 30 years, your monthly payment would be around $955. Refinancing to a 15-year loan at the same interest rate would increase your monthly payment to about $1,479, but you would save tens of thousands of dollars in interest by paying off the loan in half the time. 4. Apply windfalls or bonuses to your mortgage. A great way to make progress on paying off your mortgage is by applying any windfalls or extra money you receive, such as tax refunds, work bonuses, or inheritance money, directly to your mortgage principal. This can significantly reduce the amount of interest you'll pay over time and shorten your mortgage term. For example, if you receive a $5,000 tax refund, consider using that money to make an extra lump sum payment on your mortgage. While it may not seem like much, applying windfalls like this regularly can add up over time, especially if you make it a habit. 5. Round up your payments. A simple but effective strategy to pay off your mortgage faster is to round up your monthly mortgage payment. If your mortgage payment is $1,225, for instance, consider rounding it up to $1,250 or even $1,300. The additional amount will go directly toward your principal, reducing the balance more quickly. Although the extra money might seem minimal each month, over the course of a year, it will help you make significant progress. This method is an easy and automatic way to make a dent in your mortgage without feeling like you're putting a huge strain on your budget. 6. Make one extra payment per year. In addition to making extra payments each month or switching to bi-weekly payments, another option is to make one additional payment per year. If you have extra income, such as from a side job or savings, consider making an extra payment once a year. This extra payment will go entirely toward reducing your principal balance, which can help reduce the overall interest you pay on your mortgage. If you add an extra payment each year, you'll likely shave years off your mortgage term and save thousands of dollars in interest. 7. Use an adjustable rate mortgage, ARM, with a lower initial rate. If you're comfortable with a bit of risk and can handle fluctuating rates, an adjustable rate mortgage, ARM, could allow you to pay off your mortgage faster. ARMs generally offer a lower initial interest rate than fixed-rate mortgages, which can help reduce your monthly payment in the early years. By taking advantage of the lower rate during the initial period of the ARM, you can pay more toward your principal each month, allowing you to pay off your mortgage faster. However, it's important to understand the risks involved with ARMs, as rates can increase after the initial period. 8. Refinance to a lower interest rate. If interest rates have dropped since you originally took out your mortgage, Refinancing to a lower rate can help you pay off your mortgage faster. Even a small reduction in your interest rate can have a significant impact on the amount of interest you pay over the life of the loan. For example, refinancing from a 4.5% interest rate to a 3.5% rate on a $200,000 mortgage could save you thousands of dollars over time. You can either keep your payments the same and shorten your loan term, or you can reduce your monthly payment while still paying down the principal faster. 9. Apply any extra income toward your mortgage. In addition to windfalls like tax refunds, any extra income you earn from side gigs, freelance work, or overtime can be put directly toward your mortgage. If you make an additional $1,000 one month, for example, apply that amount as an extra payment on your mortgage. This can be a highly effective way to make quick progress, as it's essentially using your found money to reduce the mortgage principal without affecting your regular budget. Over time, consistently applying extra income to your mortgage will have a major impact on the balance. 10. Prioritize mortgage payoff over other debts. While it's important to maintain a balanced approach to your finances, prioritizing your mortgage over other debts can be a smart move if you're focused on paying off your home. For example, if you have high-interest credit card debt, you might want to continue making minimum payments on those debts but direct any extra money toward your mortgage. Since mortgage interest rates are typically lower than those of credit cards or personal loans, putting more money toward your mortgage can help reduce your overall debt load and lead to significant savings in the long term. Just be sure to balance this with maintaining good credit and making sure your other debts don't fall into arrears. Paying off your mortgage faster is not only a great way to save money on interest, but it also provides you with the freedom of being debt-free sooner. By using these top 10 mortgage hacks, such as making extra payments, refinancing to a shorter loan term, and applying windfalls to your principal, you can accelerate your mortgage payoff and take control of your financial future. While some of these strategies may require adjustments to your budget or a bit of sacrifice, the long-term benefits of paying off your mortgage early are well worth the effort. Whether you're aiming to save thousands of dollars on interest or simply want to live mortgage-free, these tips can help you achieve your financial goals faster and with less stress.